This week from our research desk, we had all these fantastic stories. Market cap to GDP at record highs, what it means for investors. Silver breakout of 2024. Global shift from dollars to gold. Intel to Nvidia, the power of catching the right trend and understanding Exter's pyramid. This was the research desk offerings this week. Request from me. Nifty's daily chart was looking very nice so far. I think in the last 7 sessions, we've climbed back from 24,600 to 25,285. What happens next week, we will see next week. But 1.57% gain in a week gone by is very, very good. You can see the weekly chart here. It is at the cusp of a breakout. So actually, there is a trend line which is about to be broken. If it does get broken, we perhaps will go to some kind of a new high. But if the world markets are in a turmoil, that will get delayed. S&P 500 was down 2.43% this week. Majority of that came in just the last session. But they're still so far away from previous breakout that the market is still doing reasonably well there. Gold is up 3.4% this week, so 12,514 per gram, or 1,25,000 per 10 grams. I mean, it's just mind-numbing numbers now. Silver also reaching some 1.6, 1.7 lakhs per kg. It used to be 60, 70,000 not so far back. So the entire monetary base is being sort of relooked at by global managers in terms of allocations. A lot of allocation is moving to precious metals. There is some estimate that there is $350 trillion of privately managed assets, of which only 1.5% is into gold. And Morgan Stanley, Goldman Sachs, these guys have come out and said that you should be 20% into gold. So if that 350 trillion were to be 20% allocation to gold, it would mean almost 65 to 70 trillion dollars worth of gold to be bought over, let's say, next 5 years. That would mean, I mean, the current gold market cap for all the gold ever mined till date is 26, 27 trillion dollars. So we are talking about very big numbers, very, very large numbers, if that 20% or even 10% has to be achieved. So there is a problem. There is a huge problem that people want allocation, but there is no metal available. The scarcity, what we saw in silver this week, in fact, we did a nice video on silver ETFs and the premiums due to the scarcity. I believe gold will see similar situations in not so far away future, where scarcity will drive premiums like we've never seen before. And remember, dollar index rose 1.17% this week. Usually gold will not rise when dollar index is rising, but they're rising for different reasons. In a normal scenario, dollar index rising would mean gold would come down, but this week both were going up. Global indices in dollar terms, Nifty has beaten all markets this week in dollar terms across the world. So Nifty has done well. Nikkei also right up there at 1.4%. Everything else was down. Bovespa, S&P 500, CAC, the Hang Seng, all were down in dollar terms. But Brazil losing the most at minus 5.7%. In the global indices momentum score, Nikkei is at the top. Nasdaq is next. Hang Seng is next. Canada is number 4. And Nifty is starting to move up. Earlier it was taking the last two positions. Now it is third last and fourth last for Nifty 50 and Nifty 500. 3 and 5 year returns are analyzed. Okay, benchmark indices overview this week. All indices in green. Mid cap, Nifty 50 leading. Nifty 500 also 1.35%. Small caps and Nifty Next 50 staying flat. Over 3 months now, small caps are still down. Rest are flat. Over 6 months, reasonable numbers in terms of the growth there. Sectoral overview. IT stocks made a comeback along with capital markets. So capital markets, there is a sense that perhaps SEBI is going to take a more lenient view towards expiries, weekly expiries. A lot of people have sent in their consultation opinion, and there is rumor that the regulator may consider softening their stand against weekly expiry. IT stocks also rebounding very, very smartly this week. These were the only two notable mentions in that space. When we look at sectoral momentum score, we find PSU banks, capital markets, metals, and private banks at the top. and you have IT, tourism, FMCG, and media at the bottom of the table. With real estate starting to come back, IT in the very short term has come back, defense in the very short term has taken a backseat, and so on. Weekly advanced decline stats, decent advances, especially in Nifty and mid caps, and you had some of the other sectors nearly 50-50, such as micro caps. Market cap segment wise drop from 52-week high has not changed much. In fact, the lower part of the markets, the small caps and the micro caps, have significant number of stocks now which are bleeding 20% to more than 50%. So if you see beyond the first 500 stocks, you have 15 and 21, 36 and 15, 51 and 23. So 74% of the stocks beyond the top 500 stocks, 74% are bleeding 20% or more, some even 50% or more. That's a significant dent in the market. Whereas on the Nifty, the same number is probably 30% only. So 70% of micro caps are bleeding hard, and only 30% of Nifty stocks are bleeding hard. Percentage of stocks which are outperforming benchmarks, nothing really great here. Nifty slightly better than others, 58% on this. Strength and weakness within benchmark indices. You can see brutal strength is golden cross is on Nifty 50 and Nifty next 50, 68 and 74%. And death cross is, of course, the opposite of that, 32% and 26%. So you want to be with brutal strength where price is greater than 25 DMA, is greater than 50 DMA, is greater than 200 DMA. Only 32% stocks are in that space within Nifty 50 and Nifty next 50. And you also want to stay away from brutal weakness. So 8% of Nifty stocks are in brutal weakness. Nifty next 50 is 12% stocks. The brutal weakness in large caps, TCS, ITC, Trent, Tech Mahindra, these stocks are showing brutal weakness. You don't want to be in these stocks from a trend perspective. VBL, Lodha, Indian Hotel, REC, Bajaj, HFL, and Naukri are some of the other ones in Nifty next 50. Is the trend improving or declining? So let's look at percentage of stocks above the 200 DMA. It's slightly improving, 59% right now versus last week, a few percent lower. 50 DMA also is moving up. So you can see that market is trying to pull up. What happens next week is anybody's guess, but for the Friday's closing, market is certainly looking up in terms of trend. Percentage of stocks above various SMAs. Uh, all metal stocks, 100% of metal stocks are above the 200 DMA. Private banks, commodities, autos, financial services, infrastructure, all of them are doing reasonably well in terms of number of stock, percentage of stocks in those categories above the 200 DMA. What's not doing well is IT, real estate, FMCG, media, to some extent PSEs also, where almost half of the stocks are not doing even as well as the sector 200 DMA. When we look at FII stats, we find that this week, last week that has gone by, 2 days, even 3 days rather, FIIs have bought. So that's a very pleasant change. You can see since beginning of September, we've had only very minor sort of buying days, but this week we had 3 reasonable buying days and no significant selling. That's a good sign. That's a very good sign that FII selling, which was of this nature just 2 weeks back, has not happened this week. And the DIIs are continuing to buy. Of course, the buying also was a bit abated, but as long as DIIs and FIIs are on the same side of buying, I think the market should be all right. You can see here there's a sort of a bottoming curve that is happening on the cumulative last month FII cash outflow. We're now at minus 29,000 crores, whereas DII last month cash flow has moved to about 63,000 crores. So all that is great news. Of course, there is a knee-jerk Monday morning potential reaction for what's the narrative going around. Let's hope it's a one-day reaction and senses are better senses are restored by the end of the day. But who knows? With Trump and Z, both are extremely passionate about upholding their country's interest, and they are basically playing poker. Who will make the next move now is anybody's guess. Let's wait and watch. I think just try to pass this next couple of months without much leverage, because there is going to be overnight and sudden news and shocks in the system. So as long as you're not levered up, you can still manage to pass through using your rules and the way of your normal investing.
Check our channel for more daily news updates and comment your opinions if you have.